Hello and welcome. Matt McCall here. Thanks for having me. This is a Friday, so thanks for jumping in. It's no longer a summer Friday, so you should all be okay. Hopefully everything goes smooth here as where you are back down in Nicaragua. I had to look to my left to make sure I knew where I was. But again, thank you for joining me. Just so you know, throughout this presentation, on the right-hand side, there is a little chat box. Please put any questions in there. I will be taking your questions live throughout the session. So if anything pops up that you have, and I'll take a break throughout and it's relevant to the topic I'm talking about, please feel free to jump in and do that. So I'm going to get going here. If anybody wants to put in where they're from, I always like seeing that because I know a lot of you come from all over the world. So if anybody wants to share where they're from, please put it in there. But I'm going to start sharing the screen here, and we're going to get right into it. All right, so as you can see here, we're taking a look at what I consider a $20 trillion opportunity. And it's not just me. It's a lot of large firms doing their due diligence. So today we're going to talk about rare earths and the huge upside potential. And then we're also going to talk about how we got here real quickly, because I need to set the stage for how we got to this unfortunate situation with critical minerals, and what's next, and of course, investment opportunities, where we need to look for the opportunities. So here we are, and kind of a couple of people from all over the East Coast, and somebody said, thanks for seeing you. It's been years. Hey, good to see you too again. It's been years. So let's keep going. Who am I? So for those of you who don't know who I am, I'm Matt McCall, founder and head of investments here at Next Wave Research. This is a new venture for us. It's only a few months old. Maybe about 2 months old, very, very, very new. But I've been in investment newsletter business for over 20 years. I started as a stockbroker at Charles Schwab back in 2000, so 25 years ago, hard to believe. Since that time, I've founded and sold an RA, so managed people's money for 17 years, a newsletter business, 2 of them, a broker-dealer, a crowdfunding company, and Pilates studio, so all over the place. So I've created things, sold them. But I always end up back to where my passion is, and that is in the stock market here. And not to brag, but just to give an idea of my background for those of you that are new. Over the last 20 years, recommend over 60 stocks. And when I say recommended, either live on television, in written articles, all documented, over 60 that have increased over 1,000%. As I just mentioned, on television, Fox Business, Fox News. I also did CNN, CNBC, the Glenn Beck Network back in the day, over 1,500 appearances over the years. Not much these days because I tend to bash the mainstream media because I think they do a disjustice to investing, in my opinion. But you never know, maybe make an appearance here and there on the old tube. But right now, dedicating my business life to educating and offering what I believe is the highest level of research to the masses, because the masses out there, unfortunately, don't have a lot of access to really good information. There's a lot of BS on social media, trust me. I know some of the people, and they just don't know how to manage money, or even, I shouldn't say manage money, manage investments and do research. But they're good salespeople, and there's a lot of good salespeople in this world. So today, as I mentioned, I want to show you that why the next decade could have truly meant fortunes for investors, position themselves early in this $20 trillion resource revolution. It truly is 20 trillion. Look at somebody's coming to us from Scotland. Oh, that's great. Thanks for joining from Scotland. As with my name, McCall, Scotch-Irish, so you could probably tell I'm from the area, if you will. So the hidden foundations of modern life are all driven by these rare earths. Every electric car, every AI data center, every robot that's here today and will be here tomorrow, they all rely on just a handful of these obscure elements that most people have never heard of. Sure, rare earths, that term has become much more popular in the last year or so, especially since Trump took office. And we've had Liberation Day in April and a bit of a trade war, trade spat, whatever you want to call it, a little fight in the playground between China and the U.S. Rare earths have become extremely important because I'll show you in a minute how dominant China is and how they use that as a pawn in this trade back and forth. And again, rare earths to me, that's kind of the invisible engine of the modern economy. Without rare earths, there's no innovation. Anything from vehicles to chips to AI data centers to robotics to aerospace and defense, missiles, you name it. all rely on rare earths. And that's why it's so important. This isn't saying, well, we need gold to be safe. Without gold, we're okay. Without rare earths, we come to a halt. So this is very, very important to keep an eye on. And there's a supply crunch coming up. By 2030, which is 5 years, but we're almost in 2026, demand for critical minerals will more than double. That's what we like to see when we see investment opportunities, where you have the big growth potential. And land-based mines means the mines that we all know and love that are all around, or hate, I should say, all around the earth. Normal land-based mines, they can't keep up with demand right now. The grades of the ore are falling. I mean, the metals they get out, the minerals they get out, aren't as good as they used to be, which means you need more of them. Projects can take up to 10 years to permit. Maybe this administration faster, let's hope so. And of course, there's always pushback from environmentalists, which, neither here nor there. I'm not going to get into that debate. But the problem is, if you keep pushing it back, which I'll show you in a moment, that does then lead to the situation that we're in right now. So somebody else put a flag in there, and it looks like, I'm going to guess that's Denmark. I might be wrong, but I'm going to just guess that. I'm pretty good with flags. So how we got here, folks? From the 1960s to the 1990s, the U.S., believe it or not, was predominant supplier of rare earths. There's a mine in California called Mountain Pass Mine. You may know a company now called MP Materials. That's really Mountain Pass Mine. That's what they're mining right now. Stricter environmental regulations in the U.S., high cost of compliance, and government red tape. That sounds familiar to a lot of industries. And I'm not going to get political today, but I got to tell you, folks, we don't need more government regulations in most areas. Yes, I am not one to say that we don't need government oversight at all. We do. But in certain areas, it's just too much, and it's holding us back. It's putting the country in a pretty precarious situation. So in the 90s, late 80s, 90s, China's like, you know what, we'll take over. It was the exact opposite. The government actually supported the industry, gave it tax breaks. And that led to what we're about to see here in a second. But China realized that the importance, and they created this complete vertical integration, meaning they're mining the rare earths and also refining it and turning them into magnets, which is the most important aspect really of rare earths, all on Chinese soil, not outsourcing it. They created an entire vertical integration. So in 2010, China's a leader by this point. They restricted exports to Japan. They had a back and forth. And that sent some prices of rare earths up 10x in months, 10 times. That much. We do know that China has threatened to put major tariffs on rare earths and threatened to hold them back from the United States. Nothing's come to fruition here as of yet, because it's just, again, it's a pawn in this chess game that the U.S. and China are playing. But who knows? Tomorrow, next month, 3 years from now, what if China and the U.S. or a new president comes in to the U.S. or to China and they don't get along well, and we get close to potentially starting a war? Before they start a war, they're going to cut us off to rare earths, and it would destroy our economy. So that's why it's so important. So the U.S., again, should have been looking ahead. But here we are, and there's only one option at this point. But let's talk about where we are, because with China dominating, they control about almost 70% of global rare earth mining, 92% of all refining, and 98% of magnet manufacturing takes place in China. As I mentioned, these magnets are extremely important to aerospace defense. And if you take that away from our armed forces, we're screwed. So that's the importance of having our own vertical integration. Here's a couple of charts I'm going to go through. Here's one, where are the world's rare earths? As I mentioned just a minute ago, about almost 70%. This is in 2024. You can see China, Brazil, India, Australia. Australia is a nice partner with us. The U.S. has partnered with them recently. But you can see here, China dominates clearly, and U.S. much less at this point. This is going back again. This is from 2020, 2023. Where our rare earths come from? The U.S. 70% from China, 13% Malaysia, 6% Japan. You can see Estonia and others. So again, reliant on China. And there's a couple of them, scandium, yttrium, I think it's pronounced. and a couple on the lanthanides, 100%, 100%, 80% respectively in 2024. So if you want scandium, you got to go to China. It's the only place you're getting it. Now, this is another chart showing that China's rare earth, look how it's breaking out. They're exporting more this year than they ever have before. Again, they've been dominant and smart about this, and I'm not being pro-China here. I'm just stating the facts. They thought ahead, and the U.S. did not. They're too worried about, some little weasel running through the land instead of actually trying to mine and keep up with the rest of the world. We put things the wrong way. Too much red tape. Here's one more. Look at these 7 rare earths right here, folks. These are very important. And look what percentage of these come from China versus other countries around the world. And again, this is just so important to realize the domination that China has and where we're at, and that we don't have a choice. This isn't one of those situations where we say, well, we don't have to do this. We can wait. No, we have to do this now. There is no waiting anymore. This is a matter of national security at the highest level. And that's why you're seeing the Department of War get involved with this, saying we need this, and they're going to back it. So what is next? Well, continued innovation, which the world is innovating faster than it ever has, will require more rare earth minerals. We know that, right? That's a fact. This is a pretty interesting stat here from Morgan Stanley. So it's not some crazy small shop. They believe there'll be 1 billion humanoid robots by 2050. At that point, there's going to be just under 10 billion humans. So for every 10 humans, we'll have a humanoid robot. I think it's possible. There's a reason Elon Musk just got approved for his potential $1 trillion payday. A lot of that rides on humanoids. And he believes in it. And I got to tell you, if 75% or so of those shareholders voted for that, they want the company to go up 5, 10x in the next 10 years, because they'll make money and they'll be pumping out humanoid robots. And Tesla would likely be the most valuable company in the world at that point, if that does happen. But what we need for that is NdPr. I'm not going to pronounce it because I'm just going to butcher it. But it's also major for all magnets, but for humanoids, they put this in a report, Morgan Stanley did. By 2040, you need 40% demand increase, 110. By 2050, 167% increase just from the humanoids. We're not counting anything else in innovation, the other magnets, everything else, EVs, aerospace defense. We're just talking about how much the demand for NdPr is going to increase due to humanoid robots. So again, we're looking for major trends. If you follow me for a long time, you know. If you haven't, you should know. We don't invest for tomorrow or the next day or next month, or a lot of times not even next year. We're investing in these huge trends, and we want to get in early. We've been able to do it with rare earths, which we're going to talk a little bit more about in a moment. You have to be patient, but you have to look for these big growth potential numbers, and that's what we see here. So here is NdPr, and right now it's trading for around $56. And as you can see here, Morgan Stanley believes the target for that is 209 by 2031. So 5.5 years from now. And I should say today it's around $56. So that's a 4Xer from here, give or take. So 4Xer from here in the next 5.5 years. I'm not saying Morgan Stanley's the know-it-all when it comes to rare earths, but you can see how the prices have come down. And as prices go up, all of these rare earth miners will obviously increase their bottom line dramatically as the price does go up. And don't forget, I know I'm talking a lot here, but if you have any questions, please put them in chat. I'll see them, and I can answer some along the way. If anything pops up, you have any questions. Again, what's next? So the U.S. government has been making some strides here, and they've taken actual stakes, ownership in rare earth and critical mineral companies. I talked before about Mountain Pass, a leader back in the 60s, 70s, and 80s, 90s. Well, Mountain Pass is MP Materials right now. Different companies set up differently, but same area that they're mining. So on that California, eastern side of California, U.S. government took a 15% stake in them. And that stock has gone bananas since then. They've all pulled back in the last couple of weeks, which is actually a great timing for why we're doing this. They also took up 5% stake in Lithium Americas, Lithium is not considered rare earth, but it is a critical mineral, especially when it comes to batteries. Because right now we are still using lithium-based batteries, and there are sodium-based ones that are on the cusp of potentially breaking through. But for right now in the near future, when it comes to batteries, lithium is still a dominant force. Then there's Trilogy Metals, TMQ. They have a mine up in Alaska, and this is, again, another critical mineral, rare earth, small company that they took a 10% stake in. And as can you imagine, a small company like that, the stock took off after that took place. All right. So for the first time in decades, folks, the U.S. is treating minerals like national defense assets, which they should have been doing for a long time. And from Arizona to Alaska, I just mentioned in one Alaska, all being fast-tracked, rebuild the supply chains, because we don't have a supply chain when you rely on over 90% being refined in China, over 98% of magnets coming from China. That's not a supply chain. That's a one-sided buy and sell there. It's not a chain. That's we need you. But we need to get the supply chain back on solid ground for electric vehicles, grid, battery storage, advanced manufacturing, again, aerospace defense to keep going back to, because that is a very important one as well. Now let's talk about deep sea mining. And so think about land mining, again, traditional land mining. The ore grades I mentioned are getting lower. There's still long permitting. There's rising costs because it's tougher to get the metals out of the ground. Then you have deep sea, and we have the deep sea nodules. It looks like a big rock. It looks like nothing important. I was out with my niece yesterday throwing rocks in the ocean, and it looked no different than that. But the thing is, they're on the deepest floors of the ocean. And believe it or not, it's about 5 times higher metal concentration, and there's a faster extraction cycle to get them up. It's like this big vacuum cleaner. They pull it up, and a lower carbon footprint. I will be honest with you and say, listen, we don't know really, truly. I mean, there's studies out there, obviously, but without fully opening a mine, underground mine, if you will, what the effects will be on deep sea life. And there's a lot of life down there that we don't even know about yet. That's one of the few areas of the earth that we don't know everything about it yet. I mean, most places on land, we know everything about it. We don't in deep sea. So there is obviously concern from environmentalists, and I get that. You don't want to ruin life that could be part of the food chain, which is running the entire world. That being said, I do think we are at a point where they're going to be able to do it, at least on a small scale, and figure things out, and maybe have to tweak it from there. But we need deep sea mining, and this government is pushing it through. So, again, it's not about replacing traditional mining. If we need to keep up with the demand, we need the supply, right? Well, supply isn't there. We need to start looking at deep sea, especially for the U.S. that has to rely on these minerals coming from outside of our allies. We need to start looking for alternatives. And single square kilometer of seabed can contain more nickel and cobalt, again, not rare earths, but very important to the future, than some of the largest mines on Earth. And there's studies out there, and a lot of them value around the same. The value of the minerals and metals on the ocean floor in the CCZ, Clarion-Clipperton Zone, is about $20 trillion. Imagine that, $20 trillion in valuation. And whoever controls this is pretty simple, will control the future of critical minerals. I mean, right now, obviously, it's China. And this is a political situation. This is something where the U.S., I believe, will be willing to be the first to give the companies the okay to get out there and start mining. There's the ISA, International Seabed Authority, and they've been kind of dragging their feet for a while. They haven't really given any full permits yet, and they keep going back and forth on the environmental effects, which again I get, but at some point they need to make a decision. And at some point, you need to realize what the benefits are versus the downside of not mining it. And again, some countries going to come out and say, we have to do it because this is a national security issue. And I think the U.S. is setting up to be the country to do that. And folks, I've studied the stock market, like I'd say as much as anybody. I'm probably top 1%. Not more than 99% of people. I put that up. I can't say I have the best track record. I can't say I'm the smartest. I can't say a lot of things, but I can say I've studied this as much as most people in this industry because it's my passion. I freaking love it. So looking back over these major resource cycles of the past, oil, obviously going back 100 years, gold, uranium was a very interesting one. I've written a lot about that. Lithium's a very interesting one in our time, in our lifetime. Shale in our lifetime, obviously. I had a direct the kind of connection to it, and my ex-wife, not a ex-wife, my only ex-wife, owned land in the Marcellus Shale, which is northeastern Pennsylvania, where I'm from, kind of that area, and dealt directly with Chesapeake and other companies and saw the effect of how shale changed the country on multiple levels. But they all began the same way. Skeptics on the sidelines. While the visionaries, the people thinking outside the box, thinking ahead, were moving early. And investors that can see this coming, again, before the crowd, made the huge gains. Once it's on every magazine cover, once everybody knows that the rare earths are the fuel of the future, let's say, it's honestly, it's too late because oil, you could have kept making money in oil or in gold, uranium. I still love. I like lithium. I like shit. There's ways you can still make money. But what I'm talking about is those big, big gains, the life-changing, portfolio changing gains. Those come early. And I'm going to pat myself on the back again. If there's anything, I'm early. But at the same time, if people are going to point fingers and say, you'd be mad at me, they're going to say, you're early. So me being early sometimes works in our favor, majority of the times. But there's sometimes, we're too early, and some people can't stomach it to hold on and wait for it to take off. And I'm not perfect. Some don't, but majority, a high majority, do end up working out. It's just a matter of patience. And, the thing is, by being maybe a year early, I'd rather do that than be a year late and miss those huge gains, because it still ends up being a much bigger winner, even if it takes an extra year or two. And that's what we try to do here at Next Wave Research. Really that next wave, catch that next wave. And remember, there's always a next wave coming. And that's what we're trying to do here for you. And what's cool about this is, your visionaries on the sidelines looking at skeptics on the sidelines, visionaries thinking about it, but this isn't science fiction anymore. We truly are in the early stages of what I believe is the next $1 trillion boom. And right now we're positioning ourselves, again, before these major headlines start hitting. So where are our investment opportunities? So I got a quick question. When you were early on video. Oh, thank you, Michelle. Said, I was there when you were early in NVIDIA. Thank you very much. Somebody else said they bought a stock, which I'm not going to name, at 86 cents and sold it at $6.86. I know what stock you're talking about, and it's been only 1 year since we recommended that. But neither here nor there. So the rare earth miners. There's companies that mine rare earths. We talked about TMQ, MP Materials. So there's some opportunities there, and a lot of them are smaller companies. Some of them out there, they mine other metals, and by byproduct, they have some rare earths. So I think there's a big, big opportunity there. I'll get back to this. I'm setting this all up for something. I'll get back to that. Deep sea mine. So November 20th of last year, so 13 days short of 1 year anniversary, we put out in the McCall Letter, which is our entry-level, beginner, if you will, investment newsletter for everybody, 3 stocks. One very aggressive, one quasi-aggressive, and one conservative. We always do a basket. We never do just one stock. It's too aggressive to do one stock. We find a theme, we do a basket. It could be 3, 5, sometimes 10 stocks, depending on what the trend is. So those 3 stocks, as of this morning, when I logged in, are up an average of 104%, folks, in just under 1 year. And these are real returns. There's people on here that are members that know this, that have made it. The gentleman right there, or woman, I can't tell. That's gentleman, Brian. 86 cents, sold at 686. I mean, this is real money. We've done it. Another way to, so deep sea mining, there are not a lot of pure plays. However, I found a company. It's a big company. It's a big company, but they recently, they used to be involved in deep sea mining, owning some land in the deep sea, got rid of it. They recently got back into it. Company it's not beaten up, but it hasn't done well over last year. But again, it's a large company. So deep sea mining would be a very small part of it. But what I like about it, their auxiliary businesses, their main business, I should say, auxiliary to deep sea mining, can work within deep sea mining. So I don't want to give too much away because I haven't even put that stock in the portfolio yet. But we're going to send out a recommendation this afternoon and adding it to the deep sea mining portfolio. So that'd be our fourth stock that we're adding. And all four stocks right now are buys, which is nice. Even though one of them's up huge, the pullback we've seen recently in rare earth stocks is create opportunity. So all fours are buys right now. Another play is picks and shovels. A lot of stuff has to go into mining rare earths, whether it's on land or deep in the ocean. If it's on land, obviously a lot of traditional infrastructure companies. If it's deep in the ocean, think about the companies who have the big subsea robotics, the automatic rovers that go on the seafloors. Those companies will be the first ones to really take advantage of this type of innovative mining on the deep ocean floors. So we have some companies in there that do exactly that have ties to it, direct ties to it, which again, I studied this for years. I had somebody pitch me this literally years ago. And I said, no, because it was too early then. And I came back across my desk about 2 years ago, took a year to figure it out. And then we launched, like I said, just under a year ago, the portfolio, but it took time. And the amount of time I spent researching, trying to find companies that have some indirect ties that could benefit from deep sea mining, not easy. Even rare earths, as far as publicly traded companies that were worth a damn, MP was the only real one out there until not too long ago. A couple Australian ones, but in the US, MP was the only one. Number 4 here is industrial metals. So we don't have it yet, but I'm working on launching another portfolio for the subscribers of McCall Letter. That's going to be kind of an add-on to the deep sea rare earth portfolio, and it's going to be industrial metals, and that's going to be everything from copper to lithium to cobalt to nickel, things that we need. And if you look at studies from anybody, supply demand issues for most industrial metals in the next 5 years, looking at 10 years, serious supply demand issues. So how do you get that kind of back in equilibrium? Prices have to go up. As prices go up, these companies make more money. So there's a big opportunity there. Another one, which I didn't write in here, I will tell you this, is Chinese. I talked about the Chinese dominating, right? They dominate rare earths. There's a couple of Chinese rare earth miners, a couple picks and shovels plays that I've done some research on, started looking to them about 18 months ago. And they might be too aggressive for the McCall Letter, just because we have another early opportunities, it's called, which is going to be more aggressive. And you pay for that research. It costs a little bit more, but I'm looking into adding some Chinese stocks to this as well. Some people might say you're crazy. You do have to have an account at, let's say, Interactive Brokers. We could buy international stocks because a lot of them don't trade in the U.S. at all, not even as ADRs or in pink sheets. So, but again, I'd give complete instructions how to do that. But I think there's, again, diversification, great opportunity there. So I'm inviting you to the McCall Letter, and we're going back to kind of what we've been doing. Typically, I did raise the price because I'll tell you what, you get every two weeks, you get an update, and you have access to all these portfolios, all our special reports. So I raised it to $298. But today, to all the people that join us on these, $79 for the year. And you could add on another year at a very low price too if you want to. But $79 for 12 months, you get 20 cents a day or $6.50 a month. So the way I look at that, that's one latte. And it's not even one latte at the airport, because I got one at the Houston airport the other day. And I think I paid, I also got something I shouldn't get. It was like a praline crunch or something. I don't know. It was pure sugar. It was horrible. It was like $9.50. And then you have to tip these damn people every time. So it was like $10.50 with everything. So it's less than a crappy sugary latte per month, or 20 cents a day. And here's what you get. Bi-weekly update. So it's both written and video. And that's the other thing. I like to do both written and video because some people like to read. Most people prefer video these days. Real-time buy and sell alerts. So you're going to get a real-time buy alert if you become a member today, or if you're already a member for the next stock. It's going to be probably 20 minutes after we end this. I already have it written out. our new stock we're adding to the portfolio is coming out this afternoon. Access to all past and future special reports, ongoing portfolio updates, access immediately as well. As soon as you sign up, you have access. Quarterly conference calls that are similar to this, but we actually go over all our portfolios, watch stocks on my watch list I'm looking at, which, by the way, you have access to the watch list 24/7. Can ask me questions about the portfolio. Never give real-time or personalized advice. Can't do that. But any other questions we can give you. And, of course, the report that's going to highlight the 3 stocks that are ready in the portfolio, plus a new one we're adding today, all 4 broken down, and about 5 or 6 pages about the opportunity, which I'm going a little quick today. I'm going to go into everything. It's Friday. And I call that the $20 trillion opportunity beneath the waves. Not all related to deep sea mining, but they do have some deep sea mining exposure. And I think it's something you won't be disappointed when you see, what's in there. And their stocks, you might have heard of some, but not all of them. But again, for today, we'd love to get you signed up if you're not yet a member. But now I could take some questions from you. We're 30 minutes in, right where I wanted to be. Anything anybody has questions about, feel free to shoot us out of here, whether it's about this, the market in general, whatever that might be. And what I'm going to do here, I'm going to share my screen of my charts because I think that's important, because I do want to talk about the stock market here really quick, and kind of what we've seen over the last couple of weeks. It's pulled up here for you. All right, as you can see here. Let's pull up the S&P 500. And, people are freaking out a bit. We're down 1% today. And what we have to keep in mind, though, is take a look at this. From the high, we're down about 4.2%. So we're not actually down as much as you would think. And keep in mind that down 4.2% is a healthy pullback. That's nothing to be really freaking out about. And as you can see in that chart, that white line is something I drew for my subscribers a couple of weeks ago. And that was a support level I was watching. And we tested it. It's actually a month and a half ago, because before it tested it, then hit a new high. We might test it again. It's something, again, to keep an eye on if that's a level you want to watch in the short term. That's around 654 or so. We're at 663. So from here, it'd only be 1.5% lower. But even if we pull back to that level, folks, we're still down about 5.5%, 6%, which is nothing from an all-time high. So this is okay. It's all right. But what I do want to show, it's a little bit different these days. Here's RSP. This is your equal weight S&P 500. Keep in mind, the S&P 500 is a market cap. So the larger the company, the more weight it holds in there. So as goes the Mag 7, the big 7 stocks, all trillion-dollar companies, as they move, so goes the S&P 500. Where this is only down 0.1% today. I just showed you S&P was down 1, so greatly outperforming. But it's lagged overall because over the last few months, the big stocks have been leading. But now, the last couple of days, it's been actually holding up much better. Now, here is a ETF that tracks the Mag 7, down 2% today. So now this has pulled back a lot more, as we've had some of the big stocks pull back, already down 6.5% from its all-time high. Pulling back to here, you get close to a 7 or 8, 9% pullback, which we can test that easily. So we're starting to see now the other 493 stocks in the S&P hold up a little bit better. They have been lagging for really majority of the last 18 months. So this is a reason that I'm still extremely bullish on the market, intermediate term and long term. Short term, we could be choppy, because the other 493 are far from bubblicious. Nowhere near bubble levels. Nowhere near. So when people start saying AI bubble, all this stuff, there's a lot of, okay, maybe NVIDIA's run a lot. Maybe these other big companies have run a lot. However, if you look at the rest, the other 493, the other 490, the rest that aren't the big trillion-dollar companies, they are still nowhere near bubble levels. No questions, folks. Geez, I mean, my goodness, I'm on here live and they don't have any questions for me. All right, I'll go for another minute or two, then we'll cut it off if there's no questions. But let me show you this right here. And this is why I think this is a great opportunity right now for rare earths. You can see the pullback that it's had. It had a heck of this is rare earth ETF. You see the run it had from 30 to 81. Pulled back down now. And I think we found a level that is a nice base down here. I think, you You look at this price level right here, 60 to 63. It did break the red line, which is the 50-day moving average, but we are, to me, in an area all in here that I think we're going to hold. And to me, we are oversold here in the short term, and I think we're due for a bounce. And I think it's a great opportunity to buy. And one of the largest holdings, if not the largest holdings right now, is we talked about MP Materials, and you can see how it's run up with the government involvement from 15 to 100. Basically gave back 50% of its gain. 50% got cut. So if you're chasing and buying the wrong time, you're hurting. This, I wouldn't necessarily jump in right here. It could come all the way down into the 30s again. But again, you're starting to look at companies that without MP, there's not much else going on in the United States right now for anything close to being ready for rare earth. So something to me that I think you can't ignore what's going on. I'll show you the other one that they invested in, TMQ Trilogy. You can see the stock went from $2 up to $11.50 back down. Very aggressive play. I wouldn't say run out and buy this one, but who knows? Maybe we add this at some point too. I can't give everything away. Question here about Brazilian mining stocks. Did you have one in mind? Because I'm trying to think Brazilian mining stocks off the top of my head. I guess is Vale still one of them? I don't know what the symbol is anymore in that. Vale, I think, is Brazilian, at least part Brazilian, if I'm not mistaken. And you can see the chart here of Vale, and you can see this is a big major player for industrial metals. And a lot of the industrial metal stocks have lagged, and this is going back to 2021. It's been in a downtrend for a while. So I will tell you, let me show you this. This is probably a nice way to look at it. So here is a chart of the industrial metals and minerals. Looks nice here because you have some of the names coming out. But I'll tell you, a lot of them look opposite. This breakout we've seen here, little pullback, that's a breakout of really underperformance for several years. So I do like the industrial metals here. But you can look here at lithium. Here's a lithium ETF, LIT. It's done real well over the last few months. Look, let's zoom out a little bit. Again, a lot of these have very similar. But what's happened, folks, here? This is really important. This is a definition of a downtrend. Lower highs, lower lows. It's broken the downtrend. You see this with so many. And to get back to where it was, it's still nearly probably up 80% from here. There is great opportunity in these metals. So when we talk about these rare earths and deep sea, I'm also looking at a lot of others. You're going to get exposure to all this stuff over the next couple of months, especially these pullbacks. You're going to get exposure to all this by being a member of McCall Letter. Atlas, ATLX. Let's take a look at Atlas for you here. Atlas Lithium. I'll tell you what I don't like about this is we just showed you lithium, right? The ETF, a little bit lithium. Keep in mind this chart and look at this chart. Greatly underperforming it. Let me zoom out because I want to give it the benefit of the doubt. It's really been kind of underperforming for a while. I don't know the company specifically, but the fact that the company's breaking down to the lowest level since July, when we had the lithium ETF trading at 5% from a multi-year high, that's concerning to me. And again, that's a very quick answer because I have to look into it a bit more, but that's one that, I would look at that and be like, that's a concern to me. Thoughts on critical metals. This is a company that's been in the news a lot if you follow the market. You can see here jump from 6 to 32 in a matter of a week and a half, back down to 985. This is similar to a TMQ to me, a trilogy where should it be valued at more than $6 where it was before it hit 32? Yes. Was it worth 32 in 10 days? No. Where is the price that the market thinks it's valued at right now? Probably between 6 and 10. I think it probably is a good valuation for it. Where will it be in year, 2, 3 years from now? Likely much higher as long as they can meet, their goals with the mines. Yeah, I think much higher. I mean, they have lofty goals along with a lot of these other critical mineral and metal companies. So they are risky. And again, this goes back to what we do with our baskets. We do baskets because without that basket, you take that company-specific risk, and it's way too much. In our early opportunities that are a little more higher level one, we have a nuclear energy basket that's up over 100% in the last year. Some small SMRs in there, but also some big names. We've had, I think, 7 different names in there over the last year. So, and we've done very well, but that basket helps. Yeah. Could we just picked a one huge winner and been up 500%? Yeah, we could have, but we could have picked, actually, they're all up big. So could have been up less than overall portfolio, put it that way. So critical minerals or metals, cautious on it, put it that way. Question on USAR, which you'll see here is USA Rare Earths. This was a SPAC. Everybody remembers what SPACs, how they were hot back in the day. The SPACs were around $10 a share. And then, it started trading. It changed its symbol over, changed the name over, and didn't do much until recently when we started having, again, a little bit more focus on this. And this is where being early and sitting and being patient, and would have worked. If you paid $10, one as high as 44, we're back down to 15 now. If you paid $10, you're still up 58%. So it's still a nice winner. I see a lot of nice consolidation from a chart between 14 and 1450. I love the huge volume breakout. I like how the volume is still big, but much less coming down, meaning the sellers are starting to dry up as we move lower. It's oversold on the RSI. And this is one of the players that I think have above 50% chance of making it as a successful miner of rare earths in the U.S. So this is one that, I don't mind having a portfolio. But again, you have to have a basket. Buying just one is way too risky, in my opinion. You have to have a basket at this point to keep really your risk lower, please. And when I say basket, I don't mean buy 3 or 4 companies under $1 billion valuation. You got to add some big ones in there. You got to add some diversification in that portfolio. And yes, you give up some upside, but I tell you, if it goes against you, you're going to be very, very happy you had a little bit of that. It's worth reward to risk, folks. But again, that's what, when you're a subscriber to McCall Letter, that's what we do for you. We are doing that for you. We are going through building that basket, telling you where to buy, when to get out, when to take profits. We've done a lot. Take a half position here, take it out, play with house money, up 300%, take another quarter off the table, let the other quarter go. Now we have a huge profit already, and the rest we're still playing with a quarter position. And that's really important. And that's how you really value what we do, and how you judge what we do by how well we do with those portfolios. And again, we've since we launched McCall Letter 16, 17 months ago, something like that, performance has been fantastic. And I'm not saying that to brag, but I am, because it's been good, and it's using baskets and taking a long-term approach to it. So if anybody has any more questions, I'm going to wrap it up now, though. But again, if you're interested, we would love to get you on board. And again, for $79, folks, it's worth it. Trust me, it is worth it. So please sign up. If you have any comments, questions, let us know. We are here for you. We're a small team now because we just restarted everything over. So please, we love the support you've been giving us for a long time. Would love to see it for many, many years in the future. And we're just getting started, as they say. We're just getting started. Thank you, Michelle, for she said she just bought the McCall Letter. Thank you so much. I really appreciate that. And again, thank you to everybody out there. It's been fun doing this 20 plus years. But again, this is getting back to my roots for the first time, owning the company wholly, first time in probably 10 plus years. So we're getting back. We're doing it our way. And it's going to be the way of the 3 pillars. Again, I should say these all the time: education, having some damn fun, and making some money. So I'll leave you on that note. Again, thank you so much. Look forward to see you inside of McCall Letter. I hope everybody's a great weekend. Again, from the bottom of my heart, everybody here at Next Wave Research, thank you. I'm Matt McCall.